welcome to DWS Market Update. Gold has once again staged an impressive rally in recent months. This raises two questions. Where does this rally come from and can it continue? To be honest, there is no single variable that can explain the price of gold at all times. The explanations vary. Gold is bought at different times for different reasons. Recently, demand for gold ETFs in particular has risen sharply. In many cases, it is private investors who feel they are underweight in gold and have missed out on the gold rally. These investors, who are jumping on the bandwagon rather late, are likely to have given the gold price another boost. But what about central bank purchases, especially the Chinese central bank, following the freezing of Russian assets in the wake of the attack on Ukraine? In fact, the Chinese central bank has increased its gold reserves, albeit to a small extent, and net purchases by all central banks have tended to decline in recent years. We believe that gold purchases by private Chinese investors are much more important. After the housing price bubble burst in the early 2020s, China imported large quantities of gold, many times more than the central bank purchased. There is another important Asian player in the gold market, namely India. Almost half of all gold ever mined has been made into jewels, and almost a quarter of this is owned by Indian women. What does this mean for investors? Gold's remarkable rally was recently fueled by ETF purchases. These could continue to boost the price of gold. Demand from central bank is also likely to remain at least stable. However, demand for gold from India has been on the decline recently, as have imports from China. Both factors suggest that Asian investors are more price sensitive than the European or American counterparts. In this respect, the gold price may be well supported in the long term, but in the short term, there could also be a setback if demand from Asia weakens significantly. With that, I say goodbye until next time.